All right, what's going on, everybody? Happy Friday. Happy Hawaiian Shirt Fridays. This one's not fully a Hawaiian shirt, but it's close enough. I hope everybody's had a great day and you've learned something and got a little bit better each day. That's what we're doing. Now, the title of the video is, so far this year has been a good year. It could be significantly better. And I debated on, if I was gonna say, this or not. One of them, just because people blasting, all their crap is just lame. It's lame to me. But ultimately, what I want is a community of the best traders in the whole world, where we can all, work together, hold each other accountable, can bounce ideas off of, because I don't really have many people that I do that with, So I figure, hey, I'll throw it out there, and we'll see, and in hopes maybe that'll attract some better traders to the community. But also another reason is that I was hesitant on doing it is because I know I would, gonna have to prove it, and my video editing skills are so trash. It's so bad. So I'm gonna have to blur things out. It's like, do I really want to do that? But whatever. I figure the pros outweigh the cons. So we'll go to it. This is Thinkorswim platform. Okay, this is what I use up here, schwab.com, right? These are my account. Okay, so click schwab.com. Boom, there it is. Account summary. And I'm gonna have to blur some of these things out. But anyways, so year to date, 95%. Now, title says over 100. Well, that's because, I've only been a Charles Schwab customer since May, right? I've been with TD Ameritrade. First it was Scottrade, and then Scottrade got acquired by TD Ameritrade. And then TD Ameritrade has gotten acquired by Charles Schwab. So anyway, so where you're seeing, year to date, it's only since May, or so, so you can switch, see like year to date, 1 year, 2 years, right? It's only since May. So you can see here on the left, only since May. Anyways, that's that. It's been a great year. And let's talk about, how it can get better. How it can get better, and the trades I'm in, what happened today. So let's go through with what happened today. Okay, let's talk about everything that I did first, and that was close out my oil short position for a loss of 22%. Those were January 17, expiration with $74 strike price for the puts. 430, sold them for 377. So that's about a 22. Oh, nope. That was yesterday's price. 335 is what I sold them for. That's a 22% loss. Again, like I said, long-term bearish on oil. It's funny, right? How yesterday, when I placed this trade, I thought, oh man, perfect entry point. You've been patient, waiting for this. Beautiful. This thing's gonna roll over. And those contracts are gonna be worth $1 million. And then the very next day, really strong day, strong close. But I said the day before when I put this on, I said, a day or two of strong price movement, and then I'll get out. Well, that is exactly what we had. Another strong day. I'm like, oh, crap. All right, well, I got to get out. But again, long term, I remain bearish. So I'll look for another short position. Here is kind of a good position, around 75 is a good position. The risk to reward is awesome. Anything above 75, I would get out. Man, now that I'm kind of talking about this still looks good. But my plan was, 1 or 2 days of strong price movement, I would get out. That's what I did. Right around here would be good to try and go after it again. But I was also a little bit confused. Is this breaking a downtrend? Does this mean that this trade is broken? But this is really weak trend line. I don't think, you need multiple touches. So I'm like, I don't know if this is, would you kind of draw it more like this, right? So anyways, we'll see what happens. I'll look to get short oil again. Now another thing. Okay, so is this a mistake? Was this a bad trade? I don't think so. It wasn't. It was just a trade that didn't work out. Now let's go over to bonds. So bonds. I placed a trade in bonds today, and in TLT, some long calls, and I exited all of these in the same day for 5% loss. Like an hour later, I exited them. This is still a really good point. I personally think I might have jumped the gun too soon. We'll see how supporting action. This was me trying to force a trade. I realized as I was in this and I'm looking at the price action, none of this meets my criteria. And it's not an obvious trade. Now, this is right here at support, and this is supporting action. But I talk about all the time, I don't really enter a trade unless it's above a 200-day moving average, above the 50-day moving average. The moving averages are moving up or some sort of consolidation, So I got out, and it was kind of funky. So anyway, small loss on this one. All right, that's that. We'll go over all my other positions, and then we'll talk about futures trading. I've been on a roll with futures, which is fantastic because my goodness, has there been 2 years of pain with trading futures. And that's the other thing we'll talk about. How can I turn 100% year into a 300% year? And I truly believe that is realistic, just based upon the mistakes that I've made this year alone, and they're huge. There have been huge mistakes. And position sizing was all wrong in the beginning of the year. So there's so many different things to learn, and improve on. And I've taken some big losses with futures trading. But we'll go over all this. So anyways, that good year could be an exceptional year, and that's what I'm striving for, is absolute greatness. So okay, I went off on a little tangent. Okay, all right, here it goes. Bitcoin, largest position. And we'll see what happens. It's getting close. You guys, everyone's watching the 100,000 level. I realize this is a futures chart, so it's not the same price as spot. Although this is like the closest I've ever seen it, but whatever. Everyone's watching the $100,000 level. Everybody's talking about over 100,000, and Everyone's gonna say, "I told you so," and after 100,000, the next stop is 1 million, right? Um, so and I don't watch CNBC. I don't watch news, so I don't know this for sure, but I'm sure that it would be blasted all over CNBC. They'll have all these Bitcoin people on there and blah blah blah. So, where was I going with this? Oh yeah, that's usually the time to get skeptical. And also Jim Cramer is saying last night, own Bitcoin, which he's right about saying, but yeah, it's just, this is kind of the things you see at short-term tops. So my strategy is different from, I think, most everybody's, in that above here, and again, I'm only talking about a shorter term trade. This is not actual Bitcoin. The strategy is completely different. I'm looking to get out above here, where I think most people will be partying. I'll also be partying, locking in some gains, but so why? Well, it's getting pretty close to the price target. The euphoria is sky high. And how much more, what's the risk to reward? And you also have to be super careful to keep your character defects in check, mainly greed. When I start getting to the point of, just another few more percentage points, that's when I keep myself in check and say, no, that's greed, and that's very bad. Now, I do struggle with hitting my price target versus closing the trade early due to greed and trying to eke out a couple more percentage points. That's something I struggle with constantly. But this one, I feel it necessary to hold this. And I said yesterday, we have to start thinking about getting out. And so here, that's where we are. Okay. BITX is the instrument that I'm in. $33 and some change is the average cost basis. $33.07 to be exact. Yeah, 64. So, this one has been a good trade. There was times throughout in here where I was getting kind of chopped up. So, it's not like I haven't tried this all in here, and I did catch all this. But I tried in here a few different times, right? So again, there's things to clean up. There's so many things to clean up. Oh man, it's super exciting. It's not like 100% year is something where, I'm like, oh yeah, it couldn't have been better. It's like, no, it could be so much better. I truly believe, like 3 times as good. And that's not like some number I'm pulling out of the air. That's these of knowing what my mistakes were and what they cost me, that I've learned from. So, all right, okay, that's that. Bitcoin. Let's go over NVIDIA. Huge down day. Like, my goodness, what a weak day. Mega cap tech is really weak, but the index is holding up okay, so I'm not exactly sure what the heck that means. You would think, I think it's bullish. you would think Amazon. Oh, okay, so anyways, my what am I in? 126.97. It's 142. But like come on, a little funky. It's not good ever to see a new all-time high from a good solid base. Like this is good, and then it giving it the gains up. It wasn't like making a new high after making a new high every day for a month, right? That's completely different. So, but you would think so. Like Amazon, look, Amazon, ugh, Meta, it's just kind of blah. Google, still even down today. Microsoft was holding in there, but Microsoft has just been range bound forever, it feels like. So when these names turn around, when these names turn around, you would expect the index to go much, much higher, So let's go over, since we've been talking about NASDAQ, decent day. Let's get rid of this thing. Decent day. It was still kind of lagging. It's hanging in there. This price action is okay. Strange, but okay, So, and anyways, okay. December 20th is the expiration. These are the debit spreads. 515 on the long call, 525 on the short call, 364. Those are currently 324. And then that leveraged NASDAQ fund, December 13, $80 on the long call, $90 on the short call. And I said I would probably add to these, which I did today, and I'll show you where I did. But December 13 is the expiration, $80 long call, $90 short call, 440. Oh, gosh. These are from yesterday. Okay, so the Qs is 364. Those are currently 333. What did I say those were? 324. Oh, yeah, so, a little bit more today. The TQQQ, December 13 expiration, $80 on the long call, $90 on the short call. 338 is the cost basis now, and added to them. Those are now 238. So I'll show you where I added to these today. Right here. And again, I thought, oh yeah, good job. Good. What a great spot to add. And then just, dumped. Although good close. Really good close. Man, it's got to get over this. Oh, and it did. Got to get over this downtrending moving average on the hour chart. It's just kept getting booted from it. Boom, boom, every time. So, yeah, good close. And like I said, we're talking about NVIDIA, Amazon, Microsoft, Apple, Google. These are the best companies in the entire world. So, what are they just going to go down 5% every single day for a year? Like, no, So, and we're in a bull market. Yes, they're looking heavy and it's a little bit suspect. But we're seeing rotation is what's going on. It's not it's not a bad sign for markets as a whole. We're just seeing rotation. So, yeah, okay, that's that. That's whatever. Have I gone through everything? Oh my goodness, no, I have not. My beloved Dow Jones. This is my all-time favorite index, is Dow Jones. I think maybe because I've done really well with this index. And Wow, it's almost right at all-time highs. And I like the companies in here, you know? I think it's cool. I like this index. And I think, the options market doesn't price as much volatility in. So when you do get a good move like today and yesterday, really, really good moves, the price, man, and on large volume. Yeah, you guys, this is clear indication of where money is moving towards. Like, this is so obvious once you kind of know what to look for. So huge volume. Yes, this is really cool. This is so cool to look at and learn. So huge volume on the breakout. After Trump was elected, huge volume. Okay, on the pullback, look at it, super light volume. And it was such light volume, it's, okay, very light volume. And then as we're starting to come back up, big volume is coming in again. Holy moly, this day was as much as this whole breakout? Wow. Let's look at this on the weekly chart. Yeah, this looks fantastic. So that's why I was saying, anything can happen, but my strategy, my style, this is an absolute buy. Buy an ad. Okay. So anyways, December 20th is the expiration. These are Davis Reds, 440, long call 450, short call 406. Those are currently 553. The other ones are December 27. 433 is the long call. 443 is the short call. 478 is the average cost. Those are currently 738. Wow. That's fantastic. So, Dow Jones is rocking, kicking butt. Now let's go over to Russell. Such a strong day. Typically I would kind of be selling into here, but thanks to my new indicator that I've come to like, it still has room. So let's see kind of the volume. I guess, okay. IWM, that's what I'm in. Yeah, and if this can break out and go higher, the Russell will become the index that everybody's talking about. It'll all be about, you'll hear it, give it a few months, give it like 5 months, and everybody will be talking about how you'll need to put all your money into Russell. Small caps. But this, again, we talked about this yesterday, I believe, or maybe I was talking about Goldman Sachs, but, come on, look at this. On the weekly chart, we got 3 years of basing action. Wow, which is quite long to think about. Wow. So this could have a lot of room to run, is what I'm getting at, for a long time. The interim could be, who knows. But, all right. So, IWM, December 20th is expiration, 229 on the long call, 239 on the short call. Those are, got those $4.12. Those are currently $6.72. What else am I in? I'm in Goldman Sachs. See, this looks good. This looks really good. I've been in this since back here somewhere in this area. 459 is the average cost basis. Yeah, up there. So anyway, so today, guys, okay, so NVIDIA, as you know, is like one of my largest holdings. And even still, you guys saw in the beginning, my account was up maybe 1 or 2% for the day, with my largest holding being down and taking a loss with crude as well as a loss with bonds. So that's all due to position sizing. And in regards to diversification, it's really kind of dumb. It's just the people that always talk about diversification are the ones that don't achieve extraordinary returns. And I'm here for extraordinary returns. And the way that I trade is a conservative way to get extraordinary returns, because that's another fallacy of you have to be real risky to get outsized returns, and that is not true. These are all things, this is propaganda that the financial industry has pushed. And they've pushed these things to make you think that you have to pay them money. Inadequate returns are okay because we're diversified. And also they get paid by moving money around and blah, blah, blah. And the biggest thing with diversification is all equity. So not all equities move up together, but in a bear market, basically all of them go down together. So you're not so then how does this happen in reality? During the good times, your returns are less than what they should be, and during the bad times, they're crap. So why were you diversified in the first place? Like ask George Soros or any of the greatest people, Bill Ackman, any of the greatest traders, most successful traders of all times. Warren Buffett will say diversification is stupid. That's literally what he says. He says diversification is for people who don't know what they're doing. And, George Soros, got over 100% position size, like $10 billion worth. Over 100% of the entire fund, $10 billion, or it was like $8 billion or something, in a single position. Like Bill Ackman holds like 5 stocks or something. I don't know what it is. Maybe it's 10. I don't know. But anyways, you see these reoccurring themes with the greatest. And I'm not trying, and again, my goal is greatness and to be the best. So I'm just going to follow what they do. Okay, so, geez, man, I'm going off on all these tangents. Where are we going now? Futures. Let's talk about futures. Who knows which one of these pages was from today or yesterday? This one's from yesterday. I wrote down Caterpillar. How's Caterpillar looking? It's looking fantastic. Okay, so let's go over futures, and then we'll go over what can I learn from this year to continue to improve. Okay, so let's go over futures trades here. So micros. Micros. All right. 705. So, where is this? 705. 705. 2805. Oh, here it is. 2805 to 822, which was like right here. Wow, look at that. Okay. I got in here because this was kind of an important level and there was some sort of supporting action and there was an obvious point to take profits here. So that's 20 points, so that's cool. Then at 8:33, another one was taken, so I guess right here. 2758.75, 2758.75. So look, that looks like a pretty good entry point. Got out 796 for 40 points. So that's fantastic. Where is that? Oh, up here. Yeah, sweet. That's fantastic. Then I did a Dow trade, which we'll go over. I guess before that I did. Okay, so we'll go over YM in a sec. Then I did another one at 9. Right here. Oh. Right here. And I was adding to this one. This is exciting. 2802. Then was adding at 2815. So I was adding in here and sold at 2834. So up here. So again, fantastic. That's an awesome trade. Really good trade. Then the end of the day, I was anticipating this breakout, sort of. God, I hate to use that word, anticipating. I was positioned for it. That's kind of where I drew the line. So, yeah, you can see it was drawn before this whole move had happened. So I didn't write down where I got in, but right after the break had started working, I got out. And so therefore that's a bad trade and a stupid trade. I exited out of fear. Fear of the unknown, or fear of being wrong, or fear of losing money. I didn't get out where I thought that I should, which would have been, although I guess not too much more, but regardless, the thought process was the same. So that's something to learn from and not make those mistakes. I'm making less and less and less of those. Although we'll go over in Dow how I made the same mistake today that I just said I was making less of. But we have two clear examples of it today. So at 7:37, look at this one. This was textbook. 7:37, I got in. So like here, yeah. 44160. So right here. And then I sell at 171 for 11 points. 171. I mean, 11 points for 60 right here. And I sold 7-1 right here. That was a pretty weak and pathetic trade. Pathetic. Because we were... This was the first pullback of the morning, and I didn't even let this thing ride. It was pretty... Oh, wait, I guess that wasn't the first pullback of the morning. Oh, where is it? Oh, yeah. So this is literally the first pullback of the morning, and I did not let this thing ride and play out. It's just so weak. That's a weak mindset to have. Weak mindset. So how do you get a better mindset? Continue learning from these mistakes. Better sleep, more sleep, wake up early, get after it. Extra strong coffee. Irish coffee, Just kidding. Okay, so now let's talk about, so all this is out of the way. Let's talk about some major mistakes where we could turn a good year into the best year. I don't even know where to start with futures. I can't even tell you how many mistakes. I don't even know. I mean, I don't even know where to begin with futures. But, okay, so futures, let's kind of summarize the mistakes. And most of it is in the thought process. The strategy is okay. It's okay. Like I said, I've been trading futures for 2 years. Probably 1 year, maybe 1 year, maybe 1.5 years, maybe 2 have I been like really trying. Well, I mean, during COVID, I was trading futures, but okay, consistently been trading futures for 2 years, like really trying with futures for 2 years. We'll say that. I guess I have been trading futures for like 4 years, if you want to be technical about it, but consistently for 2 years, really trying to hone the craft of futures. The mindset with futures that I was messing up in is, thinking every day doing something. And that's where I get into trouble with stocks as well, with what I guess would call my regular trading. That mindset gets me in trouble, where it's a mindset of trying to take as opposed to waiting and being patient and being open to receive what the market is telling you. And yeah, so I guess that's the main thing. That and emotion. It's really, I get more emotional, I guess. There's more fear, there's more greed, there's more focusing on the money, it's quicker. So that is another reason as to why, or how it can be way better going into the future. Now, I would recommend for anybody trying to trade futures, doing paper trading. But for me personally, my brain, I just can't do it. I cannot do it. So, okay, let's go over some mistakes. There's a few major mistakes. So, let's see, we're in 2024. Okay, so we'll start with here. The beginning of the year, my position sizing was not as good as it should have been. So that's huge. My position sizing was whack. So that's how to turn a good year into a stellar year. Adequate good position sizing. For different people, that's going to look differently, but all I'm saying is focus on that. And then, so this right here is probably the most major one. During this time, I was on vacation, and so I wasn't really quite prudent. I wasn't quite paying attention. I was making videos during all this, and not while I was on vacation, but this area right here, zoom in more, right here, I think I added or was still in some, or added on the stick. Can't quite recall how it played out, but twice in a row it had bounced off of this resistance area where this was a not normal down day. This was not normal. That's not normal pullback. High volume, just boom, blasted. And then I think there was a gap even in the Qs. There was a gap, I can remember. And it couldn't quite fill the gap, and then started to fail. And then I was on vacation and kind of was in the pool. And so, I'm not really, wasn't paying attention, and that's not an excuse. It's not a good excuse. It's a horrible excuse. Every minute, every second of the day, I need to be locked in and looking and not being an idiot floundering around in the pool. So, man, yeah. And by the time all this stuff is happening, I'm like, oh crap, I'm already, I'm already taking these positions down so freaking far. Where now, during this whole time, I went long bonds, and that basically saved this whole week. And that was when bonds were rockin'. That was right in here. Yeah, see, July, right here. I went long bonds in here, and right in here. I caught this whole move, and that basically saved that. And then I subsequently did some more up here too. That was good. While markets were all funky, but the move like this on this chart right now, you don't think this is that crazy or anything, but a move in bonds this much, this quickly, sent those contracts soaring in value. So that kind of saved it. But so that's a huge mistake. And, similar to how yesterday, where, I wasn't locked in right at 6:30. I was, doing other things, and again, it's not like I was twiddling my thumbs, but it was something where if I had gotten up earlier, I could have handled it, right? Same thing, it's like, yeah, well, sure, you're on vacation, but that just doesn't matter. That's an excuse, and it's just weak. It's a weak mindset. So this whole area, that was huge. And then over here, I was super long everything right here. So, okay, so that's one major mistake was here. And then in this area, which is funny to look, it doesn't really look much, but I was so long everything. I was long NASDAQ, like at 100% invested, NASDAQ, Russell, everything, Meta, Amazon, Microsoft. This was all going into earnings, Dow, Russell, all going into earnings of all that was the week of, all the companies, Microsoft, Meta, all these companies. And that was just dumb. I didn't really have a cushion in anything. I didn't really. I did in Microsoft. I kind of did. But anyways, so, that was dumb. The position sizing was way too aggressive, and it was just dumb. It was stupid. I wouldn't say reckless, but it was just stupid. So then the last mistake we'll talk about is Shake Shack. Wow, this gap was filled and it's gone up. I need to write this down. Oh, jeez. Okay, so Shake Shack. So this was in July. I was on vacation during this. I remember. This and bonds was my only position that were working. I got in this like right here, right above this 200-day moving average, and as this trend line had been broken. Why can't I draw? All right, whatever. I can't draw it. This trend line broke. I got long and sold right the day before earnings. And I thought to myself, this is acting good. The previous earnings gap way up. Markets are selling off. This is clearly showing lots of strength. You should probably hold this into earnings. But then I had a fearful mindset of, I'm losing a lot of money. It's coming right up to the 50-day moving average, which is valid. This is a clear resistance level. That's pretty valid. But the mindset was still the same. It was from a place of fear and weakness. So anyways, missed this whole move. Now, and here again, or maybe I did catch this, but anyways, I was in a Shake Shack again, and maybe I did catch this earnings. I think I might have, actually. Yeah, so maybe I only made one mistake in Shake Shack. Anyways, yeah. So those are two major ones, right? Because I mean, this was like a 14% day, you know, and with options, that's like a million percent, you know. So 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 how can I turn a good year into a stellar year to kind of bring it all back? It's not with getting more aggressive. It's not with, I mean, you guys know how I trade. We're talking about debit spreads here, for goodness sakes. You know, debit spreads are like the most conservative you can really get. And then I do longer dated in the money call options. In indexes, in some individual stocks, yes, but, you know, so it has nothing to do with kind of changing the style of trading. It has everything to do with limiting the mistakes, letting my targets get hit, not trading from a place of fear or having my emotions creep in. And mostly just letting the market, you know, come to me, really. Now there's all sorts of fantastic trades, like, see, for example, so, you know, Dow, XLF, this was coming after one of my worst weeks in terms of money that was lost. I mean, I was so long, like I said, everything, Microsoft, Amazon, like everything, Google, tech, and but my style said buy, so that's what I did. No matter how I was feeling, my feelings, you know, meant nothing. I swept it aside, and my style says buy, so I buy, and that really saved my butt, right? So I went long Dow, you know, XLF, 1, 2, 3 days in a row I was adding. You know, this is all right after getting my butt kicked and the election night. You know, so again, it's like between getting my butt kicked, losing money, and uncertainty of the election, my style still said buy. So I did, and you know, it's fantastic. It's cool to see. Yeah, Russell. Actually, I wasn't in Russell, but you know, Qs. I was in Qs. Yeah, see, off the 50-day moving average, I got crushed in here. All right, so that's it. I mean, we got so many things to learn and get better. This video might not come out till later, but anyways, all right, guys. Have an amazing... Oh, let's look at gold real quick. Gold. Rockin'. Look at this. So as I said, you know, I would be getting out here if I was in it, which I'm not anymore, until it proves itself. Well, it's proved itself. It's back over the 50-day moving average. And we'll wait for a point to get back in this. This has been a great trade. This whole year has been fantastic with gold. I've screwed up. Here's another good learning area of gold. I screwed it up so many times in here. And again, with gold, I sold way too soon a bunch of times. So these are all things to clean up. You know, I got chopped in and out in here like 1,000 times. You know, and that's the thing. It's not about, you know, being wrong or whatever. That happens all the time. It's about following a strategy consistently. Whatever that strategy is for you, it doesn't as long as it works, you know. But just following the strategy, no matter what. I follow the strategy. And I don't listen to what people say. Don't watch TV, or the news, I should say, like CNBC. You know, I just trade my style, and that's it. That's it. And sometimes it's really, really hard to do that, and hard to cancel out the noise, and it's tough, really tough. But if that's what it takes to be great, then bring it on, baby. All right, I'll catch you guys on Monday. My favorite day of the week is Monday. All right.